Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing within a range, and at this point, heading into the open, our short-term bias is going to be neutral, while the intermediate-term bias continues to be neutral bearish. And off the open, we're going to watch and see how the market responds to the 29.08 quarter to 29.11 initial support and the 17.5 to 20.5 pre-market resistance. Whichever way the market breaks outside of these two zones is going to help us determine the short-term bias. So if on the downside we get a breakdown below the initial support zone and that breakdown is happening on some decent downside momentum, then that would signal the sell side gaining control, and from there ES could quite easily head down into the 29.03 half to 29.05 zone, where we will have to exercise caution. And then below that we have yesterday's RTH low at 28.94 to 28.95, where buyers could be active, but we will have to assess the real-time situation to determine whether it's worthwhile to trade that area on the long side. Because if we're seeing excess weakness and some decent and sustained downside momentum, then even though we can get a reaction at 28.94 to 95, the market does not have to stop there, and ES could head lower into 89.5 to 91.5 and 83.25 to 85.75, where responsive buyers are more likely to step in. Now, if on the day time frame the market starts selling off on some decent downside momentum, then given that our intermediate term bias already favors the sell side, we know that it can result in some pretty decent downside movement. Whereas in the event of an upside move, that neutral bearish intermediate term bias can still attract sellers at resistance, which is why I think the upside scenario is going to be more challenging to trade as compared to the downside scenario.